There is a disclaimer. We will record this session and we will publish it on my YouTube channel, Ask VC. So, if you feel uncomfortable with your questions published publicly, please don't ask them. But I hope this is okay for you. So my name is Denis Kalishkin. I'm the principal at New York Venture Capital, and some of you saw me at the event last week in Barcelona. Others know me as for reading the blog about space tech, or in some other or some one way or another. And today we want to kick off a two-week free pitch deck polishing sprint. Idea came from my team when we did an event. We saw many amazing startups, but unfortunately, not all of them could pitch. So we decided for those who we didn't select it for the pitch session, and for others, we decided to do this 2-week intensive sprint and to help you out to polish your presentation. So this is why we're doing this kickoff session today. A couple of words about myself. I am a principal at New York Venture Capital, I2BF Global Ventures. I've been in this fund particularly for 11 years. Most of my expertise is coming from investing in the US companies, which are transforming bowling legacy outdated industry through the stack of technologies. So I've seen stuff like the most unusual company I saw was CRM for funeral agencies. Then I also in 2019 I launched a media project called Ask VC, and I launched it as an initiative to help entrepreneurs in those cases when I can't invest in them, because I understand that good introduction, good advice, or instruments which could improve your fundraisability and help you build a business are sometimes even more valuable than pure money. And this is why I'm doing various stuff, including this particular sprint. And for those who read Space Ambition, or for those who are passionate about space, I'm an aerospace engineer myself in the past, and me and a couple of my friends, we run a media called Space Ambition. It's a blog on Substack, about 74,000 subscribers, where on the weekly or bi-weekly basis we publish relevant content, take interview, talk about startups, VCs, technologies related to space technology. So if you're passionate about space, feel free to subscribe. Okay, so a couple of words about I2BF. So I2BF is a New York venture capital. It has been founded by a Stanford alum. The fund is for over 20 years on the market. We did about 200 deals, about 450 under management in total in assets under management. Several companies have already done IPOs. Some of them are unicorns. We have about 20 exits. And co-invested with top VCs. So that's kind of credibility. And starting about this sprint. So when I talk to startup founders, I often see this idea that I can't raise funding because my presentation is business financial model, data room are poorly prepared, or I talk about my business in their own words, and this is why I can't raise money. Reality is a little bit different. In many cases, you can't raise money because your business have some intrinsic problem. Some of them small, some of them big, and there are about 20 parameters which I typically use to make a decision about a particular investment deal. But to cover all of them, it requires like more than a month. So I decided, as a part of this sprint, focus our attention on pitch deck, because everyone, if you raise funding, You will need a pitch deck, and we will take standard Sequoia pitch deck template, and over the next 2 weeks we will work through it, polish it, and yeah, and I'll tell you in a moment how we will work. So as a part of this pitch deck polishing sprint, we wouldn't be delving deeper into your business and wouldn't be looking into the problems associated with your business. So this is just a disclaimer. But if you want to work on this later, I have formats when we can work on this as well. So the pitch deck polishing sprint kicks off today. We started on October 26th or 21st, and it will last till November the 3rd. It will be happening in the online WhatsApp group. So all of you are part of this group. So all the important messages will be pinned. But yeah, and how our 2 week sprint will be split into 7 steps. So the first is the easiest one. Today, after the kickoff session, we will publish this schedule for the 7 weeks, and the only thing you will need to do is write a quick introduction in the WhatsApp group with a hashtag intro, so that you get to know each other, and probably you will see people who are relevant for you. So probably you will find useful contacts. Then tomorrow, the next assignment will be to watch my video on the how to assess the market size and answer the question, what is your total addressable market size, and what are the drivers which drive your adoption of your solutions, what are the barriers to enter to your market, and what are the drivers for adoption of your solution. And after that, you will have 1 day for that, and you will prepare one slide for your investment presentation. You will share it with our team and with the peers, and you can ask questions, and me and my team we will answer to this question. Then, after you do this, on Thursday, we will publish a video with a step-by-step pitch deck guide, compilation guide, where you will see, 10 types of slides which should be in your presentation. And what you will check that your existing presentation has all those slides, or is missing something. And then you will have time by Monday next week, and Tuesday next week, October 28th, we will have a 1 hour QA session with me, and I will be answering to your questions. And then you will have time to finalize the pitch deck version after this Q&A session, polish it, and you will submit, those of you who would like for me to go through those decks. You will need to submit the final version till November 3, and then we will do a review and do a final. We will select 3 startups for the final pitch on November the 5th. So what you will get in the result out of all the startups which will be active through these 2 weeks, who will polish their pitch decks, and who submit them till November the 3rd, we will select top 3 startups, which will pitch to me directly, and I will spend about half an hour with each of those startups. It will be publicly, so you will pitch for 10 minutes, and for 20 minutes, I will give you feedback on your pitch deck, on the problems, and we will brainstorm how you improve your chances for the fundraising. Then we will pick about 3 more startups, so which which pitch decks I will analyze offline, So I will go through the decks. I will record a video feedback, and I will publish it on your YouTube channel so that you will see like how you can improve your pitch deck. And also the bonus, since I am a principal at New York Venture Capital, and we also have a separate investment program where we can invest $200,000 at the pre-seed stage. So we will look all the startup pitches, pitch decks which submitted to us, and we will select those if the startups are good for us for investment. We'll select them in and I will pitch it to present it to partners of my VC. We have two subsections in our webinar today. So the first one was about the presentation and about how we will work in with the intensive. And if you have any questions about how we will be working during the next 2 weeks, please feel free to ask them. You can either ask them in the chat session, or you can ask them by voice. Any questions so far? We will also have some time for questions in the second subsection. The next 15 minutes.
Excuse me, may I ask a question?
Yeah, go ahead.
Thank you very much. What happens if I miss the deadline on November 3rd? The problem is my pitch deck is not ready completely enough, so most likely I will miss the deadline.
So if you miss the deadline, you wouldn't be eligible for the final pitch, the final pitch of on November 3rd. But if you want in any way for us to consider your deck and to show it to the partners of my VC, you can we will provide the framework when you can apply it later. But we will.
Okay, thanks. Will I be able to participate in this 2-week series of webinars?
Yes, it's completely free. You just participate. You see the assignments. We don't kick off of the group those who are doing nothing or are not submitting anything. So like it's we provide the playground. You use it as you wish, and like the checkpoint, the most important checkpoint is November the 3rd, till November the 3rd, when we will be selecting the startups which I will be given feedback to.
Okay, perfect. What I'm gonna do is collect expertise and knowledge and nothing more this time. Thank you very much.
Okay. Any other questions so far? Yes, Sunit, go ahead.
Sorry, I was on mute. Dennis, thank you so much for doing this. Really appreciate the time that you're spending with all of us. I just want to quickly get a sense of the timeline again, because you had mentioned the dates, but they're not corresponding to the levels that we are going through. So I remember November 5th and 6th, and I remember the October 21st date, which is today, but I don't remember the dates which are in between. So if you're able to kind of share those as well, that will be very helpful.
I will repeat. Okay. Yeah, let me go back through this slide. It will be easier. Yeah, I'd better to add. So kick off today. Tomorrow, until tomorrow, you will do just a quick introduction into the chat. We will publish the schedule and with all the dates today after this kickoff, like in 2 hours. So in the group, you will see the pinned messages with all the necessary dates. But repeating, so tomorrow you will start working on assignment on a market sizing, and you will have 1 day for this for completing this assignment. So you will watch a video which is 1.5 hour long. Then you put together or polish your pitch or your the single slide which is related to the market sizing and the trends. So we'll polish it, and you will publish it in the group, and my colleagues, they will look into it and provide feedback, and peers also will provide feedback. Then the next step is on Thursday. We will publish another video. It's a step-by-step. The first is October 23rd. We will publish another video. It's also an hour and a half long video with a step-by-step guide on how to compile 10 blocks of slides according to Sequoia pitch deck. So what you will need to see, to do, is to watch this video, to look at your pitch deck, to see if all those 10 types of slides are already present, or some of them are missing in your pitch deck. And then you will have time till Monday, till the end of Monday. It's October 27th, so far as I remember. Till the end of this day, till the end of this day, you can provide the semi-final version of the updated deck. Then if you don't provide it, it's not mission critical, because on October 23rd at 6 p.m. You will 6 p.m. Madrid time, like exactly the same time. So exactly in a week, you will have Q&A session with me for 1 hour, where you can ask questions which you still have about your deck, about what you're doing, anything. So, and after that, you will have time till November the 3rd. November the 3rd, so far as I remember, is Monday. Give me a second. November the 3rd until the end of November the 3rd, the next month, and Monday in 2 weeks. And you will submit, when you can submit the decks. Then we take a few days for our team to look through all the decks which were submitted. And on November the 5th, we will schedule. We will report first. We will say first of all the three startups which we picked for pitching me on November the 5th, and then we will pick 3 more startups which I will analyze in the asynchronous way until November the 8th. So, and this is how we wrap up the program.
Thank you so much. Thanks so much, Denis. Really helpful.
I hope I made it clear.
Yeah,
we will publish the schedule with all the dates, and every step. At every step, you will have pinned messages saying like, now you need to do this one. Okay, and as always, you will my assistant Natalie. You can ping her, and this information will be provided. You can ping her, and if any question, just ping her in the chat, and we will be answering it. So during this next 2 weeks. Okay. Any other questions?
Thank you so much, Denis.
Yeah, you're welcome. Any other questions? Yeah, I see a few questions in the chat. Let me look. This is Natalie. Yeah, we'll focus. Louis is asking, will the focus be on to be read pitch deck or to be presented if later? What is the goal of our presentation? We will be more focused on the pitch deck, which is to be read, because it has a little bit more text, and you will most of the cases you will need it to send it, to attach it to the messages which you will be sending to the to investors. And so we will be focused on this text version, which you will be sharing using various sources with investors, and investors will be reading them. Yeah, thanks. That's a really good question, and thanks for asking it. Eugene is asking, am I right that there is no core domain you're interested in here? Everything is possible for this program. Yes, Eugene, you're totally right. In this in this program, we wouldn't be making difference for deep tech and non-deep tech, geography, etc., because making a presentation and this pitch deck template is more or less universal for all types of startups. Of course, there is some specifics, but there's not that much specifics, to be honest. So this intensive is applicable for all types of startups. Okay. Any other questions before we jump into the second subsection of our call? Okay. One more question. No questions. Let's move forward. The next 15 minutes, I will tell you about the most important things you need to think about when talking about to investors, and then we'll have also 5 to 10 minutes for extra Q&A session. So if you didn't have a chance to ask a question right now, you will have it in 15 minutes. So, to be honest, as I said, when I talk to startups, I look at more than 20 parameters. But today I want to pay attention to 6 of them. So these are the 6 steps or 6 parameters or 6 features investors look into when analyze startups. So first of all, is what exactly is your startup doing? Because some fields of startups are not that sexy for investors for various reasons, and sometimes founders, you as founders, you typically pick ideas, and sometimes you pick ideas from those niches which are not interesting for investors for whatever reason. For example, I've been working in venture capital for 11 years. When I started working, VR, 3D printing, and drones were were very sexy industries for investors to bet on. But for a decade now, almost investors were not, you know, were not interested in those types of businesses. So, first of all, make sure, and VC and experienced founders typically do that. Make sure that the field which you're operating in is interesting for investors. I understand that if you're already running your business, probably you wouldn't be closing it, but at least make sure that the industry you're operating in is sexy for investors or not. And if it's not, probably it's time to think of course, investors sometimes changes their minds, but be prepared that in this case it will be tough for you to raise funding. So it means that the funnel of potential investors will be bigger, that you will need more revenue traction or some progress, other metrics of progress, etc. The next parameter, which startup VCs typically pay attention to, is actually the team. And when we talk to, especially at very early stages, at pre-seeds and seeds, when we talk to startup founders, we want to understand like this particular guy or girl or the team could make $1 billion company. And we pay attention to why you as a company become the category leader, the number one player, the unicorn. And what we pay attention to, first of all, of course, if you're a second-time entrepreneur, ideally if you raised funding previously or exited the companies, so this is what founder VCs like. Or if you ran classical business, not a startup or not IT business, but you were successful in that, that's also a good sign for us. If you was like at the managerial positions at great companies, build big projects inside the corporations, etc., that's also a good sign. Or for whatever reason you have like some experience, so some other achievements which show that you have a founder market fit for this industry. Please show this in your presentation, as presentations, in your data rooms, in any communication with investors. But if you're not, it doesn't mean that you need to start doing your startups. It means that you will need to show more progress in revenue traction in some other fields. So because we as investors, we don't we analyze all the startup all the parameters simultaneously, in a combination. So if you see that you're like you have a young team without previous business experience, so probably you could add some advisors, hire some good people, good managers, and show more revenue progress. The third thing founder VCs typically pay attention to is the market size. And this is why, particularly tomorrow, you will pay so much attention for you to do this market size analysis, just because many startup founders, many of startup founders don't even like to do this market analysis, market sizing, and they just find a random number in the internet and say, okay, this is $1 trillion business, we're doing it. But VCs like when you do a bottom-up calculation. So when you calculate the number of potential clients, multiply it by the check, and multiply by a reasonable share you can take. In this way, you show how big your key business could be. Because if you calculate the total addressable market and investors say, okay, startup could take 10% of this market and multiply total addressable market by like 10%, we make a judgment about how big the business could be. And for example, if you're doing a SaaS business and you have a $1 billion market size, then you could build a business with $100 million in revenue, and given that the valuation could be around, and given the multiples for SaaS businesses, EV sales multiple is typically about 6. So multiplying $100 million to 6, we can reasonably suggest that this company will we can sell this company for $600 million and calculate our potential returns. So this is why this slide, and you will have later a total time assumptions file in your data room where you do this calculation. This is why it's crucial, because it's interconnected with the financial model, and with it drives our decision because it shows how big could it be. And you won't believe how many startup founders actually have very small markets, and they didn't do this calculation properly, and this is the reason why they get no constant no's from VCs. But this typically don't say that. The fourth step is actually competition. And today, startup market is very competitive. And if you have a brilliant idea, like millions of people around the globe are looking for ideas for startups. And it's reasonable that a dozen of people come up with the same idea. So typically, you will have 5, 10, 15 competitors which are more or less at the same stage as you are. And the ideal competitive environment is when you have startups which were launched like 6 months, 12 months ago, probably raised $500,000, 2 millions, up to 5 or 10 millions, or 10 million rounds. It means that they are still having a revenue $500,000, $1 million, probably $2 million. So they are not holding the majority of the market, and you still can't can become the player number one. So when you do this competitor analysis and show it, and you typically have a separate slide, or sometimes even 2 slides in your presentation, show that you are in moral show like how you are positioned compared to other competitors, and show them like show your competitors. Don't hide this information, because VCs will find them and it will make a bad impression. You'd better show them and show your vision how the VC should see them. And you not only have a competitive slide in your presentation, you will also have a competitive battle card or competitive analysis file in your data room. So make sure that you have you do this properly. And the fifth parameter, which is very important, is now why now is the right moment for your startup. And startup founders typically say, well, what was the why now moment for Uber or for Facebook, etc. But if you don't see it, it doesn't mean that it didn't exist. And why this parameter is really important, because startups don't have enough resources to create markets, to nurture markets, to build markets. So they ride the waves which already rise. Only big corporations can create markets. And probably you heard that Meta, like Facebook, renamed to Meta when they were promoting metaverses. But like these are big companies, they can spend hundreds of millions of dollars for marketing and for creating ecosystems, etc. Startups can't. So this is why startups ride, the waves which are rising, and this is why it's crucially important to answer the question why 2 years ago it was a little bit early to build your startup, and why in 2 years it will be a little bit late. Because uh, out of millions of people on the planet, dozens of people will find the answer to this question, and they will be building this business. And if you can't answer to this question, probably you're either early or late for the market. And I've seen it happens all the time that startups are a decade ahead of the time. For example, you have all seen VR headsets, but this is the fourth reincarnation. Even now, this is the fifth wave of VR headset implementation. It happens that startups are early to the market and they die, and sometimes it happens that you're too late for the market, and your competitors have already raised tons of money, and they're dumping on a market, and you will die just because you can't raise funding because your competitors have already raised $100 million. The answer to this question is not always technological. So yes, I'm pretty sure many of you are doing AI startups, and for many of you, the why now moment is because of the capabilities of AI, but oftentimes it's driven by market. So technologically, it could be done 5 or 10 years ago, but the market drives the adoption. For example, during pandemics and lockdown, forced all the travel companies, hospitality companies to adopt. And this was technologically, the solutions for travel industry were available even before, but during the COVID time, it was the time when they had to adopt. So sometimes this why now moment is driven by regulation or some other factors. For example, I've been talking to a startup which is working in the winery industry, and they work with export. And because of the tariffs in the United States, the distributors are looking for new producers of wine, and they are changing their suppliers from one industry, from one country to another. So, for answer to this question for yourself, what's driving the adoption of your why now is the right moment, and what's driving the adoption of your solution. And the last but not the least is the competitive mode. If any of you have ever applied to Y Combinator or some other accelerators or talked to VCs, you often hear one of the following questions: Why now? Why it will be difficult to replicate of your business? What is the barrier to enter for your market? What is your secret sauce, etc., etc. So not all of you have had courses in finances or economics, but from the microeconomic, I know that if you work at the market with perfect competition, where dozens or hundreds or thousands of more or less similar players, then the revenue, the profit margin of such businesses is close to zero. And VCs are asking you this question because they want to understand that okay, for now you don't have many competitors, but if you show the way that there are money, those competitors will arrive. And there are many AI agent type of startups right now, but many of them will die just because in some cases agents it's not that difficult to build an agent. In some cases it is, and in those cases where the barrier to entry is low, there will be hundreds and thousands of agents, and it will be good small businesses, but not the businesses where you could build a big business. And and if you have a competitive mode, if you have a barrier to entry, then the profitability of your business will be good, and you will use this profitability to fuel the growth of your business. And of course, sometimes founders say, okay, we have built our prototype MVP like over the weekend, or we spend a month to build it, and two people build that. Of course, a big company can replicate it. But when VCs are asking this question, where they are not meaning what is the barrier to enter the market at the moment, but they're asking you how you will increase this barrier to entry, how you will evolve your product like over the course of 1 or 2 years, and how you will build those barriers for your competitors, how will you increase like how you will evolve your product, make it more sophisticated, more sticky to your clients, so they couldn't switch easily from you to your competitors. Okay, these are the fact steps which I wanted to ask you. Uh, you can subscribe to me at LinkedIn. Please you can scan the QR code at the moment. If you have any questions, here is my WhatsApp. You can write to me directly. And here's also my email at askvc.org. This document will be also published in our WhatsApp group, this presentation, so you could watch it, read it afterwards. And the video will be also published later today. Yeah, so these are the main questions I wanted to cover today. Now we have like 5 to 10 minutes for Q&A session. Now, please let me look into the questions which were in the Q&A. And you can ask your questions. Yeah, raise your hand and ask a question. I don't. That there was a conversation about the pre-seed decks, but no meaningful questions. So, does any one of you want to ask any questions today? Yeah, Dmitry, go ahead.
Yeah, can I ask you a question about somehow the preference between B2B or B2C businesses, especially in the AI field? Because from what I observe now, like most of the businesses or startups which been pitching, for example, last week, or which I've seen on the AI Summit, they are focused more on B2B because it seems like that's where the AI can bring now the biggest value. But in the same time, we see that consumer behavior is changing dramatically with all the ChatGPT and all the things. And it seems to me like now is some imbalance in what's being pitched. And is there anything what you can suggest here, or is it just seems so from the side?
So when I started working in venture capital in 2011, many startups were about B2C. And why was that? You know, B2Cs typically have huge markets, and they are ripe for monopolization, and huge companies like one of the most valued company like Facebook or Google, they're actually B2C, B2C, like they have a very strong B2C angle. But like around 2011, 12, 13, investors were more focused on B2B. Why? Because actually, when we talk about people in Western world, in the United States, in Europe, uh, they don't often have this like huge disposable income. It's just too hard to get money from to get any dollar or penny from those people, and very high customer acquisition costs, and this is why while if you sell exactly more or less the same product to B2B clients typically they look at the prices they pay in terms of ROI which they get, so you can charge them twice or three times higher prices and they will pay for it. So this is why historically venture capital gravitated towards B2B solutions. And of course, if you're doing a B2B SaaS company or B2B company, it will be easier for you to raise funding. I'm not saying that B2C startups are not raising funding, but typically it's harder for them. There are specific funds which are specifically focused on B2C play, but many like the majority, more than 50% of the market is looking for B2B startups. So unfortunately, this is the case. But if you're a B2C startup and you believe you could build huge company, try to pitch to those VCs which are going after B2C. And there are quite many funds which are still doing B2C, but B2C stuff because of those reasons which I mentioned. And the other thing I want to add is, this heuristics, which I said that okay, B2B is better than B2C, but sometimes those VC patterns change. So probably we live in the era when this pattern of decision making for VCs will change, but so far it hasn't changed dramatically. So keep this in mind doing a B2C startup and raising funding. Okay? Did I answer to your question?
Yeah, very clear. Thank you.
You're welcome. So the next question is from. Unfortunately, I can't read the name. The Ashot.
Yep. Can you
Yeah,
hear
yeah,
me?
yeah.
Well, first, thanks for running this webinar. It's very helpful. Second, just to give you context, very briefly, instead of baking and delivering, we bake our pizzas while delivering so that they're delivered hot and fresh to you. In this business segment, my question is regarding the team. There is nobody in the market who has done this anywhere in the world. So we are not able to hire for experience. I personally have been running this business now for the last 4 years, so I probably think that I know more about it than anybody else anywhere. However, it feels very arrogant and immodest to brag about your capability like that when talking in the team section. So how does one present this problem to the VCs?
First of all, what country you run this business in?
India, Delhi.
India. So in India, you have a pretty sophisticated startup ecosystem, and but it's like, of course, it's much smaller than in the United States, and in those local ecosystems, they are more open to B2C solution and this less sophisticated stuff businesses. So essentially, you need to pitch that you can build a big business and like answer to the 6 questions which I mentioned before, and there was a startup in the United States, Zoom Pizza, and it was not successful.
Yes.
And yeah, and the main barrier, the main challenge you will be facing will be exactly that. So VCs will be saying, okay, Zoom Pizza didn't take off. Why you will? And you will need to clearly explain why you will be different and why you will succeed while your competitor in the well-funded competitor failed. It happens. And VCs, but VCs like will be asking this question.
Right. Thank you so much.
Okay. Any other questions? Yeah, let me look into the Q&A section. How to determine how much startup should invest in a pitch deck? Vladislav, do you mean how much time you need to invest into putting together a presentation and polishing it?
No, actually, I mean money. This is always a question, and if there is a framework just to understand how better to proceed with that, it would be.
You mean what is your ask, like what is the round size? There are typical depending on the country which you operate in and and stage which you are at. There are some ups and in the industry which you operate in. There are like upper and lower amounts which is reasonable for this. For example, if you are doing a pre-seed in the United States and you're doing AI, you probably will raise from $750,000 to like up to $2 million for pre-seed. If you're doing a pre-seed in India, you will be raising about $300,000 or $400,000. If you're raising Series A's, there will be like a Series Seed. It will be like $2-3 million in the United States. In Europe, it will be about $1-1.5 million. But you can Google. There are pretty good, pretty good reports. For example, KPMG does one, and you can see what they do. They do those those quarterly reports showing the state of the VC market, and they show our upper and lower and the medium size of the round for each stage. And they do a geographical breakdown for US, Latin America, Africa, India. So you could use that as guidances, but to better answer what would be the right ask for you, is first, like, it's better to talk to a VC, ideally which invests in your region and in your types of business, and then you test it. So yeah.
Thank you.
Yeah, the Dmitry has, these are the reports. You can copy them. Yeah, these are the global, this quarterly reports which I was talking about. Okay. Any other questions? So, what are the red flags that you never want to see on a pitch deck? So the first red flag is we have no competitors. We have like the best solution ever. No one is doing exactly what we're doing. So if you don't have direct competitors, you probably have market alternatives. So show them that way. The other thing I don't like, it's not a red flag, but I don't like is when someone writes like where the market size is $4 trillion. Your market size can't be $1 trillion. Your market size typically, like showing a market size above $1 billion is enough. So these two parameters typically, imply that you haven't done your job correctly. So these are these are the two things which I would pay attention to.
Sorry, which was the first? The second is the market size, and the first?
The first was is poor competitor analysis. Typically people
Okay.
saying we don't have competitors
Okay.
or irrelevant competitors. So if you're hiding those competitors, and the third slide, which typically founders do improperly, they try to hide their real revenue traction. So they are showing in the slide the booked GMV, some other vanity metrics, to hide the brutally honest truth that, for example, I'm pre-revenue. And this is actually pretty stupid because VC will ask this question, and will figure out that you're pre-revenue. So there is no reason to hide this. It's better to focus your attention on the people, like business angels, for example. So it's better to focus your attention and address investors which are relevant to your stage, instead of hiding some facts that you're like very early in revenue, and praying that for whatever reason VC will decide to make an exclusion in your case and invest in you, because it's in most of the cases it doesn't work that way. What if you collect data from C but receive the what if you so the next question from Eugene is, what if my business collects data from customers, B2C clients, but receive money flow from B2B partners? I saw this cash flow called B2B2C. Yeah, that's B2C2B. It's not clear B2C and B2B, but it takes best from both flows. What you can say about it? So Facebook is B2C2B, okay? Yes, because you're monetizing the data of users. So probably, uh, again, as I said, there are even some VCs which invest in B2C. This B2C2B model is many investors are less accustomed to. So the spectrum of investors which are going after it will be also smaller, but yeah, it could work. What the WhatsApp logo takes us to WhatsApp business account. Is there one for the normal account? So just a second. You mean that you mean this QR code takes to the business account? Give me a second. So I try to understand like what's that problem. But like this QR code should be this is my personal account. You can reach out directly to me through this account. Didn't understood the question. What if my product has both B2C and B2B solutions? Will it be a red flag? A gay product doesn't have focus, or it will be considered as a good sign? VCs will be paying more attention how much revenue have you generated from your B2B business. So this is they will be asking you a lot of questions about this B2B business. We unfortunately we need to wrap it up for today. I hope that the next 2 weeks will be productive for you, and me and my team we will do our best to help you out to polish your pitch deck. And I hope the next 2 weeks will be transformative for your business, and you all raise funding. Again, as I said, I will publish this video, I will publish this presentation and the program today. And yeah, let's get down to business.
Thank you.
Thank you.
Thank you.
Thank you and bye. Have a
Bye.
good evening.
Thanks. Bye.
Okay.